Well, it made this one here at 1 o'clock, but you can use this one while you're long or bullish. I know it looks cherry picked and talking. I promise I got something for you that are thinking that right now. I promise you, just sit tight. But in the afternoon session, you can see how that lunch hour plus 30 minutes, that 90-minute window, that low right here is where sell side resides. And in the PM session, it raids that liquidity. But ICT, look, man, there's some relative equal lows down there, and you teach relative equal lows, right? But before you get there, where's the next logical range to look for in terms of liquidity? That lunch hour or 90-minute period. Now, I said a lot of talking about things that some of you get pissed off about because you think I'm thumbing my nose at you or talking down to you. But no, I'm talking to you like a friend. If you were friends with me from childhood, this is exactly how I talk to you. I know what I'm talking about. I know how to make crazy ass profitable traders. But I also have students that are fucking lazy. They're not going to do what I tell them to do, and they're going to make excuses why they failed because they didn't listen and they rushed too fast to get into live trading. That's your mistake. That's not my mistake in hiding things from you. I didn't do that. I'm not doing it here tonight either. You have every advantage after tonight. Going in and looking at what I'm looking for. Where am I focusing? I promise you, after tonight, your shit's going to be different. Yes, it's going to have nuts. AM session ranges 9:30 in the morning to noon. So, right away, we are considering this in the afternoon. So, we can always refer to it in the same trading day. So, we could be anticipating a market reversal profile, something to that effect. If we have an elongated market where, say, the New York session, morning session rather, of the current trading day is consolidation. And then we have a directional lunch hour, or during the lunch hour, it's consolidation as well. We can refer to, and if we're bearish, we look at the previous session's trading. Now, if you look at the previous session and you're using electronic trading, what specific low am I looking for? I'm looking at the 9:30 in the morning to noon. If I'm not going to look at the PM session range, remember I'm taking you to very specific pools of liquidity. I'm going to look past the PM session. Well, why would I do that? Because we're already trading below it over here. So would I refer to it for sell side? No, we're already below it. So if I'm bearish, what am I looking for? What low am I looking for? Which draw on liquidity am I looking for? In this regard, I'm using the AM session sell side liquidity. If I was bullish, it would be everything I just said here in reverse and opposite. I would be looking for the buy side. But if we're bearish, I'm looking for very specific pools of liquidity. If I showed this on regular trading hours, it would still get that low. Very important. Even though I'm showing you down here the electronic trading hours, I'm doing this for the sake of showing you an understanding that whether your chart is on regular trading hours or electronic trading hours, and I'm looking at the previous daily range, or if I want to trade below yesterday's lows, what low am I looking at? The PM session low or the AM session low? Very, very specific. Not ambiguous. Not, well, I don't know which one he's looking at. He's always changing shit around. No, I'm not. It's always the same stuff. Always the same logic. Always the same logic. What's changing is the profile that I'm operating in because the market's delivering a specific way and I have to adapt to that. And then I anticipate. I'm not reacting to price. I'm anticipating where it's going to run to. What does that mean? Everything I'm teaching you tonight. Now, I don't expect you to watch this tonight and walk away feeling like you know everything about what I just said. You're going to need to watch it a few times. And if it's something you don't want to do, you won't learn it. I promise you, you won't learn it. One time watching, it ain't going to work. You need to listen to what I'm saying in here and then go into your charts Spend weeks and months going back through it. That's what will convince you that this is sound logic. It's not contrived. It's not conjecture. It's not made up. It's absolutely what the market does every week, every day, and it will not stop. So you can see the previous AM session low over here, sell side liquidity. This dotted line here denotes we're looking at the 20th of June, 2023. So I can't use the afternoon session high and low because we've already, starting at 9:30, we're already below that. So what am I looking for, ICT? What am I supposed to be looking for? That low. It doesn't matter if it was a lower low, okay? Listen, if there was electronic trading hours showing and it had a lower low and it went below that low here, I would still, listen, I would still refer to the PM session range as I mentioned a little bit ago in this presentation tonight. And before that one, I would go to this specific range here. It's a specific time. I don't care about overnight highs and lows. I'm looking at very specific regular trading hours. Regular trading hours is going to be referred to in the next trading session. They're either going to be respected or blown out. It's simple. That's not hard. All right, so let's blend some things here, okay? So as you can see, we have several things here in this chart, and this is today's trading, the 21st of June, 2023, and it's the E-mini S&P. And I photoshopped some things in here. I'm obviously being facetious by saying that. The opening range, as I taught you here tonight, that was one of the factors I utilized today. If you were following me on Twitter, I showed my PM session trade, which is what you're seeing here, using everything that I taught you tonight. Let's go through it, okay? This morning, we were watching Fed Chair Powell give his testimony at 10 o'clock. And I had my favorite usual suspects that I like following on Twitter. Not Twitter, on YouTube, rather. And those that were live streaming, I listened to them. And no disrespect, gentlemen and ma'am, they had really no idea what was going on, which is exactly what one would expect because the market's gyrating and going sideways. It's just churning up accounts, going sideways, beating up everybody. You have to wait until we get through lunch. If Fed Chair Powell is going to talk and it's a 10 o'clock testimony or whatever, wait for lunch. Just wait for lunch. If you do that, you will get the cleanest setup for the day. The easy, what does that mean, cleanest setup? Michael, what do you mean when you say that? Where everything just simply jumps off the chart and it makes itself very obvious. You want setups that are very obvious. That's clean, okay? I don't want you as my student going into the marketplace and trying to just be an action hound and try to trade everything. I don't teach my students to do that. The ones that blow their accounts or fail their funded account challenges, that's a characteristic that they have. That is not a derivative of learning from me. That's a personal character flaw. And you can correct it, you can fix it, but you can't place that blame on me. If you wait and you listen, I counsel all of you real-time live on Twitter. Don't touch this right now. All right, focus on this time of the day. And when it's appropriate, I'll point to where the market's going to go to next. I did that today. The opening range gap here was utilized to get what would otherwise be done if you had done these same entries and managed the same position, would have resulted in a $9,362.50 before commissions. Now, I don't know about you, where you are in the world and your walk in life, but almost $10,000 is a pretty respectable amount of money. I mean, you can go on a nice vacation with that. You can get your spouse something really nice. You can probably do some really good Christmas shopping with that. So that's not chump change. And I want you to think about the logic that's shown here. PAL, 10 o'clock, trash market. Okay? Just ignore it. Just ignore it. Just don't even worry about it. Oh, but it's going to run. It's going to move. That is you as a neophyte trader and an action hound. You feel like you have to be able to do something in that. I'm telling you with 30 years of experience, you don't need to. You don't need to. It's liberating when you just relax and say, you know what? This is the highest degree of manipulation right now. And I don't know what they're going to do because they can manually intervene and send price careening higher or lower, and you won't be able to see it coming. So don't torture yourself. Do something else. Sleep in. Go have breakfast with your spouse. Work out longer. Take your boat out. Ride your jet skis. Cut the grass. Whatever. Don't do anything in the marketplace. Just wait. And then what time does your shift start? At 1:30. That's when the macro will start running. At 1:30, the market creates a low here. Market trades down below the New York lunch sell side liquidity again. They can sweep it again. But notice it doesn't take that low here. I don't require it to. The logic is it's going down there once more. Just in case. Rallies. Comes back down into this down close candle, which is a bullish order block. I'm not teaching you order blocks in this lecture. The market rallies. We have displacement again. Fair value gaps and whatnot. I promise you, I'm going to take you into a 15-second chart where I utilize the information I'm going to show you here. What I saw was the market drop down below the initial New York lunch sell side liquidity. It's dropping down below here, and then I'm anticipating it to go up into that opening range gap. That's this shaded area up here. I don't need to show you an example where it goes all the way up there. I'm teaching you low-hanging fruit. That's the first threshold for you to learn under my wing. You can, and you can see it tonight, the logic is leave a partial on for that. But I'm trying to encourage you while you're learning to learn how to do this modularly, step by step. You're not going to be able to go out there and do a lot of contracts in one time. You won't know how to do the pyramiding that you're going to watch me do here in a moment. You're not going to know all that stuff, okay? And to remove all of the, oh man, I wish I would have had a partial on. I wish I would have held it longer. You don't know where your growth is going to be and how long it's going to take you to get to a point where you can trust doing that. So I allow for, and I build into my teaching, room for you to develop independent from my personal timing. See, what I think a student should require in terms of learning may be more or less than what it's going to require for you. So I'm trying to be a realistic mentor, not just someone that says, go through my workshop, go through my training in this many days, months, weeks, or whatever. You're going to come out knowing what it is you're going to do. And if you can't, then you suck. That's just not practical. So what I do is I teach you where the market's going to go. What is your terminus? Terminus, while you're first learning, is the easiest low-hanging fruit objective. So if we're buying down here on the basis that that sell side liquidity pool for lunch has been swept here, and we see this returning but not respecting a run into and below that low. It's denying that, and it showed a willingness to repel back above this low. That's what I was looking through. All of this low here, I'm looking past all that, going right to that low right there. Remember, this low here doesn't get taken out until the PM session. Look at your chart. Now, I mentioned it earlier. This low, I trusted it. But Michael, what happens if it went down there? Then I would have got stopped out. What? Yeah, sometimes I get it wrong. Sometimes I mess it up. Sometimes I bring the baggage, okay, the scar tissue or my ego into it, and I try to outperform my own algorithm. and I get my ass handed to me and I get stopped out. If the trade's still valid, I'll go back in and re-enter. You've watched me do that. I've recorded myself doing that. Go on Twitter. It's there. It's there. If I get it wrong, you see it. If I get stopped out, you see it. If I get stopped out and it's still a good trade, I'll get back in. If I get stopped out and I'm done, I'm done. I don't hide that from you. So I'm buying under the premise that we're returning into that sell side liquidity here. One more time. What is it doing here, though? If it's not taking out that low, what is it doing? It's trading below the rejection block, which is the lowest closing price in this swing. I don't need that low to be taken out. I don't want to see it taken out. So all the understanding of price action over here, I'm anticipating this accumulation and smart money jumping on board like I was to run to relative equal highs and more specifically inside that opening range from regular trading hours where we stopped trading and where we started trading. $42.22.5. That's this high in here. I could have very easily had a runner run up in here and try to get one tick below the high of the opening range gap. But if I do those types of things, some of you already get pissed off at your own performance because you think you should have 30 years of experience in performance and results too because you watched my videos. Or you spent enough time, which isn't realistic because none of you spent enough time to do what I'm doing. It's not ego. It's not arrogance. It's real practicality. I mean, think about it, folks. I may have 30 years of experience, but I can't pour that into you in a short period of time, and then you have 30 years of experience too. It's unrealistic. And some of you are very hard on yourselves, and you think that you should be able to do what I do. So I try to teach with that in mind, and I teach low-hanging fruit. Those terms are my way of saying, okay, if it's going to go higher, where is it going to go to logically? Well, if it's taken sell side out here, that means the sell stops have been rated there, and we swept down into the rejection block and preserved that low. In the afternoon, should see a run up into that gap. And for those that are wondering why should that happen and not take out the relative equal lows, is because we've already worked below that AM session low. Remember, before we transitioned into this slide here, we traded into the previous session AM lows. So we were really in a deep discount. And that opening range gap has not been traded into from the open. It opened and ran away from it quickly. It's never came up to it until here. And it left what? Relative equal highs. What time of the day did it do it? Between 12 o'clock and 1:30. So that's your lunch buy-side liquidity. Everybody that's short thinks it's going to keep going down. That's where their stop loss is. Who's doing that? Funds. Not retail Rick. Large funds. Deep pockets. Buying. And every time the market gave me a buying opportunity, very specific PD arrays, on a 15-second chart, I was entering. This is a 1-minute chart, by the way, if you're looking at it here. It's 1 minute. Every one of these entries were based on a 15-second candle. I recorded it. I've already shared it on Twitter, but for the folks that don't have Twitter or refuse to watch it because they don't want to be on the Bird app or whatever, I got you covered tonight. But every time it reached above relative equal highs, I'm taking a partial profit. Up in here, another partial profit. Above this high in here, partial profit. And above the high here, partial profit. So I don't require it to trade above this high. And I'm teaching you that you don't need to do that either. I mean, if you got out just with this, 44.22.5, that's below the actual liquidity above this high. And if you mimic this same trade in your own account, whether it be funded or in live funds, and you profited $9,362.50, are you going to beat yourself up because you didn't have that run up to the opening range gap high? Some of you might, and that would be unfortunate. That's not what I want you to think. That would be really a toxic mindset about your performance and what you're trying to do. You try very, very hard to filter out negative thinking. That's why social media is the worst. Social media is like cancer, okay, for a developing student, because everybody's got an ego. They're all pulling their dicks out for a measuring competition, okay. And the point is, you're trying to learn how to make money, and all I'm trying to do is teach you how to stay in the game long enough so you can keep your money, learn the skill sets I'm showing you, so that way you can leave your fucking job and then live your life and do whatever you want to do. Okay, and you don't need to listen to me the rest of your life. I don't want to be doing these videos. I don't want to be doing it. So I'm leaving you a legacy so that way you can come back to this information, take your kids to this information, whatever, and build legacy wealth. You don't need to entertain these people's egos. You don't need to come back and keep me feeling good about myself either. This stuff works, but you have to graduate in your understanding about where's it going to go and be realistic. And then over time, when you start seeing this unfold, reasons for it to go higher, you leave a runner on. That's the only way. If you're in there trading and you're thinking to yourself, man, I don't know, I should probably leave a runner on there. I know if I leave a runner on, it's probably going to stop me out. And if I don't put one on, it's going to run. Well, put one on. What's the worst thing that's going to happen? It's going to stop you out in profit. See, you're wrestling with being right. And many of you are trying to do that if you're doing it in front of an audience. That is hard. Because not only are you wrestling with your internal dialogue about what you should do and how you're managing the trade, but you're inviting everybody else's feedback to your trade. And guess what? Guess what, cowboy? That's not your trade anymore. You've invited the entire community that's watching you and your audience to manage your trade for you. And that means you brought in a level of uncertainty, fear, pride, and pain that would otherwise not be there if you were just quiet about what the fuck you're doing. That's what this is all about, folks. It's not about getting out there and showboating and show what you can do and prove this and prove that. Is it going to matter when you're paying off a house? How many people believe you did it? How many of you are going to have to come back here on social media when you hit 7 figures and you're a millionaire? How many of you have to come back to social media and go to the usual suspects and say, ha ha, ICT made me a millionaire? If you think that, you're doing this shit for the wrong reasons. The people that are really killing it, they don't come to my Twitter. They don't leave comments in my section of my videos. They don't do any of that stuff. They're out there living a life. They've already thanked me. They've already shared their testimony, and they're doing big wheel shit. Grow like that. All right, so this is a 15-second chart, and I have to make sure that I don't play sound on this, and I got to make sure I do this correctly here. I recorded a song, as I typically do on Twitter. I love Twitter for that reason. It's like a text message to you. Like if you had my personal phone number, and yes, there's a lot of people that have it, and yes, they fucking abuse it, and yes, I'm changing my phone number in November. A lot of you that listen to me or follow me on Twitter, when I'm tweeting, that's the same thing if you were like my best friend, and I'll say, hey, look at this market here. That's real time, right now, right from my mind, right into Twitter, and I can't put the music on in a presentation format that I loved doing over the years. I used to be on Twitter before leaving it. They started censoring me, and I left it. And I came back, and one of the things I was looking forward to was going back and doing vignettes where I record myself executing, putting on a trade, putting a stop loss on, managing it, putting on a pyramid position, building it up, taking profits, and watching the position go from beginning to end. And I usually put a song on there. It may not be the type of song that you like. It may have foul language in it. It may be a genre that you don't like. I don't give a shit because it's what I like. Okay, I like doing that because it's just what I like doing. It's usually received well in the community, but I can't play that here because I'll get a copyright strike, and I don't need all that shit here. So I'll leave a link so that way you can look at it in the format that I gave on Twitter, but you don't need it. It's going to be the same thing here. As a reminder, every candlestick you're seeing here is a 15-second duration. Now, think about that lunch sell side liquidity pool and where the market was going to go up to. Now, right now, you're looking at the dollar index. It's going to change over to index futures, but I want you to think about what I showed you before we got to this slide here. Because when the video starts playing, it's like 2 minutes long, and I'll walk you through as much as I can. But everything that has already been told to you tonight, that's what I was using. Okay, I promise you, I didn't have something secret. Okay, everything that I taught you tonight is exactly what I implemented here, and everything I'm commenting and annotating in the chart real time as I'm recording it. That's what I was seeing. So I try to do as much as I can in terms of annotating the chart, showing the reference points, where I think the market's going to be respecting certain levels and why it should behave a certain way. Keeping in mind that I'm doing this with 15-second candlesticks. So I have to know what the fuck I'm talking about to be able to do this. To be able to annotate it, show you where the levels are going to be respected, how it's going to reach up to this and do it. Think about, seriously, folks, think about what would be necessary to be able to know what's going on. If you're just simply looking at the 15-second chart like everybody else on Twitter was doing today, and they watched it and look at the comment section, like, what the hell? What the hell's going on? What 15 seconds? Forget the time frame. Forget the time frame. Think about what I told you tonight with the lunch macro. It's running down to the sell side, and it's going back up into that opening range gap to take the buy side on the New York lunch high, where the buy side is. That's all that I'm doing, and I'm going to use every PD array that is discount. I'm going to put in every one of these things could have been your individual entry based on the things I've taught just using a 15-second chart. Now, there's other things if you were looking at a 1-minute chart, far less entries, obviously, but you could see certain entry patterns or PD arrays to get into the trades based on a 1-minute chart, 2-minute, 3-minute, 4 or 5, or a 15-minute chart. But you have less entry opportunities the higher time frame that you go. So just to add insult to injury for the people that say this is bullshit and it's faked and all this other stuff, I go into these ultra short-term time frames just to overkill, just to rub their nose in it, to show you that this stuff works and it will work for you. It ain't going to work for you the first time you watch the video. It ain't going to be working for you because you watched a couple videos and you wrote a couple sentences down and you think that's journaling. You're going to have to really roll your sleeves up and dig into this stuff and study it. It's a lifestyle. If you don't make it a lifestyle, forget about it. It's not going to work for you. You have to be passionate about it. All right, so I'm going long here on the S&P. Here's that run that didn't take out the low at 1 o'clock. And I'm adding and pyramiding, and I've already annotated that fair value gap and told you that it's an inversion fair value gap. That means it's going to go above it, treat it as support, and then rally up into the buy sides that I'm going to show you here. So you can already see that 44.22 even level is highlighted as buy side liquidity. Notice it's below that high I was showing you when we were covering the lunch liquidity. So that's an order block. It's reclaimed, and it dug into the inversion fair value gap. And for the folks that are thinking, oh, the order block doesn't work, see here, that entire range is the order block. And I'm adding into it here inside the fair value gap that is already identified as an inversion fair value gap. So this is going to be dynamic support here. Watch how it respects it. I've already shown you here it's going to go up. And just like magic on a 15-second chart, look at that. It's unbelievable, isn't it? Now, my stop loss is below the inversion fair value gap, and I'm showing you where the executions are. So everything matches now, folks. This is not replay, none of that bullshit. There's another partial here. And my stop is below the low at 44.16. I don't want to chase it up there because that's inefficient. It can trade down inside that, so I don't want to put a stop loss at 44.17 and a half. It can come back in there deeper. I'm making allowance for that. So my stop is staying below that. I'm not in a hurry to guarantee higher profits. I'm more concerned about my limit orders filling. My stop is not being concerned about. And here comes another run up into a 10 lot limit order that would put me at 5 remaining. See that retracement down in there? I'm not worried about that. You might be freaking out because you put your stop loss higher, or you maybe even stopped out. But this is proper stop loss management. And here's the limit order, and then now we're going to run for that buy side here. And then once it runs that high, I'm wanting to trail my stop loss up then. This is exactly what I shared on Twitter today. Everything was recorded. This is not market replay. This is not the trading view replay. None of that stuff. Okay. The logic that I showed here doesn't show everything that I taught tonight, but what I was utilizing, because you don't hear me talking in the trade, but the things that I'm doing to trade this, everything I'm doing is what I was teaching you tonight. It's not conjecture. I didn't form fit it. I do this stuff every single week with you all on Twitter, over and over and over again. And when time permits it, I'll give an example every single day. Today, I gave several examples. This one today, I told you to wait for the PM session. That was the morning advice. And I went in there and murdered it. So every single one of these individual entries, that could be your model. Some are better in terms of where their entry was, but I'm using them as pyramiding opportunities. None of the things in here that I showed violated any of the bullish order flow. This is real order flow. Notice there's no DOM, depth of market, level 2 data required. No book map required. Everything that I've outlined here is shown to you on a time-based chart. My partials are based on liquidity. Look at my exits on the partials. They're at the highs. My entries are in very key levels that would be a discount array for what I've taught you. And I've done so on a 15-second chart. That's not even a minute. It takes 4 of these individual candles to make 1 minute. Does it look like noise to you? Look at how the market reacted right there. I time traveled, folks. I time traveled when we were down here. I drew this out and labeled it inversion fair value gap. For the folks that have been following me for the last couple weeks and month or so, probably 2 months, I introduced the inversion fair value gap. Okay, so every one of my PD arrays can be utilized as a contrarian entry. But unless you have the narrative in mind, knowing where is it going to reach for, where's the liquidity that's going to be drawing price next. How do you know that, ICT? Well, you start it with the weekly candle. Where is it going to gravitate to? I don't care if you use another way of trading, folks. I don't care if you do trade with harmonic patterns. Okay? If you use what I'm teaching here tonight, it's going to make your shit start working. The times that it fails, it's going against what I'm teaching you tonight. I promise you that is not arrogance or pride or ego speaking. Your shit ain't working when it goes against this. If you trade retail concepts with this stuff, your retail shit will start working. You don't have to like me. Okay? You don't have to tell everybody that you trade SMC or ICT or whatever the fuck you want to call me. Okay? I don't care. I really don't care. But I really want to see you succeed, even if you fucking hate my guts and you troll me and you make videos about me and all that bullshit. I don't care. I'm not losing any fucking sleep. Okay? I can still do this stuff whether you love me or hate me. And I really want you to listen. And you never, ever, ever have to tell me that it improved your trading. I don't need it. I know it works. I want you to think about everything I talked about tonight and how it gives you a plethora of opportunities that will always be there. Folks, these intervals, they happen every day. And guess what? They can't hide it. They cannot hide this information from you. It doesn't require any kind of subscription to any fucking thing. It doesn't require you to do anything extra. It's simply just looking at the time intervals. Where is that pool of liquidity above and below? And where does it fit in the narrative? I'm guiding you. I'm teaching you. But teach me bias, ICT. This is all part of it. It's all part of it. Go back and look at the tweets. I've told you to focus on the PM session. What is that? 1:30 to 4 o'clock. Think. How many opportunities are going to be much more within reach for you now because you have this understanding in price. It doesn't mean you're going to be able to go out and do it tomorrow. Remember, I said in this lecture tonight that you have to go through weeks and months of back testing, studying what it's done, logging it, journaling it, and encouraging yourself in the commentary, in the chart that you screenshot, that you put into your journal, and you talk to yourself like you knew it was going to happen in advance. And you're tricking your subconscious into believing that is experience. And because you're sugarcoating it with everything positive and you're never saying anything negative, when you watch real-time price, it won't feel scary. Subconsciously, if you always looked at price action or looked at people like me or other people that you think are frauds, scammers, or they don't really know how to trade or whatever, you are literally flooding your brain with toxicity. And I guarantee you probably can't make a fucking penny trading because you've done that. This game is 90% psychological. It's easy to talk yourself out of it, and it's easy to program your mind to keep you in the game. Before you really know the skill set, you have to cheerlead yourself. Nobody's going to be able to do it for you. Just watching my videos is not enough. I promise you, I have paid members that have paid me, and they still can't do it because they have not done what I've told them to do. Or they think they've done enough, but they haven't. The fruits and the results will come because of what they've done. And they got to leave the bullshit at the door when they come in. They can't bring in Wyckoff theory and harmonics and other stuff and try to blend it together. You have to learn this first. Forget all that stuff. Learn this. And then once you understand this, it's easy to go into a John Murphy financial, technical analysis of the financial markets. That's the retail trader's Bible. Everything in that book can be contrarian if you understand this. But same side of the coin, if you flip it over, you can make those retail concepts work if you understand this premise tonight. See, the problem with retail traders is they don't look at the market like this. They're looking for patterns, for pattern's sake. They're looking for indicator confirmation. They're looking for things that cuts through all the, they think, noise or uncertainty or randomness of price action. If you're believing that price is random, what the fuck are you thinking the indicator is going to do? It's not changing the randomness. It's just adding something else to believe in. So that's not the right way. The right way is understanding why price delivers the way it does. And it does on a basis of time and price. There's a time that it operates, and it's reaching for a very specific price. I've already taught you the time elements, and tonight I've already taught you the price elements, time and price. Between those two, you will always have a setup for life. You can have a breaker, you can have a institutional order flow entry drill, you can have a fair value gap, an inversion fair value gap. I did this trade today to rub the nose of the guy that was in my comment section, and no, you don't see him, but he's in the videos where it looks like my comment section is open rather, like it's usually the pre-recorded videos. I think it's what it does. I don't think it lets you do a comment, or it doesn't look like there's going to be comments open for a live stream. But whenever I do a pre-recorded video, the section underneath the video, it looks like you can leave a comment. And I have so many people saying first comment, whatever. That's silly. But invariably, I get some goober that comes in there and will say, like, this is never done in advance. You're making this stuff up. It doesn't work. It only works sometimes. Well, that's true for you because you don't know what the fuck you're doing. But I know what I'm doing. And in inversion fair value gaps, I know which fair value gap is going to be inverted. Here it is, folks. And I've shown it to you on a 15-second chart. Like, you can't get any plainer than that. It's real. It's absolutely a real phenomenon. It's really there. But you know what makes it valid and how to predict it? Understanding liquidity. Understanding time and price. That lunch hour that nobody goes to lunch, the algorithm runs on that liquidity. And then it starts repricing and spooling to the next pool of liquidity. So since it took sell side, okay, what did I teach you? Price only goes up to take buy side or buy stops. Or it goes up to an inefficiency above market price. That's the only two fucking reasons that price goes up. Period. End of story. I don't care how many years you've been trading. You can call yourself a market maker. I don't care what institution you work for. You banked that this one. You did this trading for that one. You manage funds. I don't give a shit. Price only goes up for one of two reasons. To go up to an inefficiency above market price, or it runs up for buy side liquidity, buy stops. That's it, folks. That is it. It's not going up because of buying pressure, and it's not going down because of selling pressure. It's going down for inefficiency below market price, or it's going down for sell side liquidity. Period. End of story. That is it. If it's not doing one of those two things, it's going sideways. I already teach you and taught you. The economic calendar tells you when it's going to consolidate. So what does that leave? Up or down? Okay. How do you know if it's going to go up or down? Look at the weekly chart. What is it going to reach for on that weekly candlestick? Something above the price or below the price? Which is the most obvious? There's going to be a fair value gap or liquidity. Which is the most easiest, closest proximity PD array? It's probably going to go to that one. But what if you're wrong? Then you fucking lose. What the fuck? You're going to lose. Sometimes you're going to lose, folks. You're going to get it wrong sometimes. Why are you afraid? Look at how many new opportunities are made available to you now. You have information that is not found anywhere else. I have laughed at all these fucking clowns for 30 years on the internet, pretending they had some kind of holy grail. And they're clueless. They're absolutely clueless. And they perpetuate and regurgitate all the stuff that I bought in books. Over 2,000 books. And it's all horseshit. And I just can't bring it to throw it. I can't bring myself to the point of throwing them away. Because number one, I spent a lot of good money on it. I worked hard for that money. And it just reminds me of what I had to wade through. And all the horseshit and lies and garbage that people believe that makes these markets move up and down. And it's all horseshit. It's a waste of time. All the things that you think is going to make the price go up and down, if it's in a book, unless I wrote it, it's all horseshit. And yes, I just let pride and ego speak right there because I can do it. I have the authority to do so. You have a setup for life if you use this information. I have given you the freedom to be able to pick what your entry model is going to be. Which one are you going to use? Is it going to be an order block, a fair value gap, optimal trade entry, inversion fair value gap, turtle soup, consequent encroachment of a wick? All these things are left into your hands. And I'm making allowance for that because I don't know where you started in my videos. And if you're wondering where to start, the 2022 model or 2022 mentorship, it's 41 videos. I promise you, if you start there, you'll get the shortest route to going into the charts and finding something that works every fucking day. Every day it works. Every day. Now, here's the caveat. It may not work in the market that you're looking at right now, but it's in every single one of these markets. It's in there. So what does that mean? If you're an index trader, it will be in one index. It may be in multiple index, but it might only be in one. And that's why I teach you to look at all three of the averages, the Dow, the NASDAQ, and the S&P. It may not be in the pound, but it is in the euro. You see the difference? That's why I teach at least a triad. When I taught predominantly only Forex, I was teaching dollar, euro dollar, and pound dollar. You can't miss it then. It's there. You have to have intermarket relationships and study like that with a closely correlated market. Euro and cable, or euro dollar and pound dollar, are closely correlated. They're inversely correlated with the dollar. So when the dollar goes up, they go down. But just because the dollar's going down doesn't mean it's a good buy to be in euro. Sometimes it's a better buy in cable. Most times it's better than cable. Better in cable, rather. But there's going to be times when the dollar is going sideways. And the euro or cable may outperform one or the other. What does that mean? It just means that the real trade is not in that one. It's in the exotic. Meaning that you can use the pound dollar if it's really running, or it's predisposed to go up more if the dollar is consolidating. that means you probably have a really good trade long in pound yen. Don't take my word for it. Just consider it. I've done lessons in core content about that stuff too. Those videos are not coming down in November. Everything on this YouTube channel will stay. I won't be here updating it after November, but I promise I will leave you with more than you will ever need. And you study at your own pace. Don't rush. If you rush, it just makes your learning curve longer. You can't speed learn this. You can't learn. I saw a guy. I watched all the ICT videos, and I've condensed it into 15 videos. And now you can do it quicker and sooner and faster and more efficiently. That's bullshit. You hear that? That's me laughing at your fucking ass. You are a clown if you think you can take everything I've done and condense it into the smallest little time frame of a presentation. You're going to miss so much information. There's so much information in the stuff I've given. And you don't even appreciate what it is because you just went through it one time and you haven't even started trading with real money. And when you start trading with real money and you come back and you watch those same videos again, you're like, oh shit, he said that. I didn't hear that the first time. You're going to swear up and down that I made an edit to the video, and I haven't. It just doesn't mean anything to you right now because you're not even a demo trader yet with consistency. When you start trading with real money, the lessons and all those droning discussions, the jawboning by ICT, all that stuff's going to be much more meaningful to you. It's going to be rich understanding because it'll be you that's prepared to hear it. You're not prepared to hear it. Most times you're not. And to be honest with you, I'm not talking to you. I'm talking to my children. That's what all this is for. That movie with Michael Keaton, My Life, that's what I'm doing right here. When I'm gone, they'll have all this. They'll have all this to listen to and compare and contrast with notes that I have for Enigma, which I am not teaching, and none of these presentations ever had Enigma in them. And no joker has cracked it and figured it out either. They may call what the fuck they're doing Enigma, but it ain't even close. I promise you, it's not even close. I am Enigma. Appreciate you hanging out with me tonight. Hopefully this was insightful and helpful to you in your learning. And if you could, give me a thumbs up on the video. It doesn't cost you anything. It's an encouragement for me to want to come back and do more like this. Until I talk to you next time. Be safe.